Ladies and gentlemen, welcome to the Oracle earnings call live stream. Hopefully everyone's doing well. We have with us today the great and powerful Neil, couch investor, Stephen Fiorillo, the milkman, and as well Jose, but he's going to be here in a second. I don't know. We'll see. We got to message him on make sure that he's coming.
I completely forgot that you guys already changed the time.
Changed the time from what? Sunday. What was it supposed to be on?
Usually for me it's 1 hour later than this, but you guys have already switched. Like today for me, usually 3:30, at 3 I was already seeing some of the stocks move and I'm like, what the heck is going on here? And then
understood. I didn't even realize. So you're not participating in
not yet
daylight savings.
We are doing it, I think, in a couple of weeks.
Got you. Okay. Hopefully everyone's doing well. Let's quickly take a look at the markets today. For the most part, I mean, there are some other companies that are showing earnings, but for the most part, it is just Oracle that I'm going to be paying attention to. I don't know if you guys have any money on anything else. But let's have a look at the Mag 7 names really quickly. We'll have a look at oil as well, which I think is starting to climb back up. I think the last time I saw it was about $86 a barrel. But overall, Meta stock is up 0.9%, Amazon 0.3%, NVIDIA 0.5%. Wow, that is a decrease from where it was earlier today. Tesla broke under $400 a share, up only 0.2%. Apple up 0.3%, $260 a share. Google at 0.3%, $306. Microsoft's red. Do you have any of these names, Neil? I'm sure you have all of them.
From the big company, no, Meta, Amazon, and Alphabet.
We
did buy more Meta before.
The great and late Jose.
My apologies. I'm sorry. The little one took a little bit longer to get ready.
No problems. You make your own schedule. I like it. How are you?
Pretty good. Excited. I don't know if excited, but curious to see what happens after today's earnings. And hey, Neil. Hey, Steve.
Steve, I think, is on the phone or something. But
yeah,
we'll be all good to go after. Steve's in the chat, but not on the mic. Let's see what Oracle does.
I mean, they did do a lot of tweeting over the last 2 days, trying to correct the so-called news that came out with regards to that OpenAI expansion plan. So I hope they do it because they know they're going to have a good earnings report or at least a good guidance, because otherwise they would really look like a bunch of amateurs.
Stock is at 100. A lot of capital, and if they go to 125 or lower, I'm starting to buy.
Are Neil, Jose, are you guys have positions or looking to potentially enter in if this falls?
No, I'm doing it through the Neo clouds.
Yeah, I have somewhat of a position. It used to be bigger, but then I transitioned more into like the CoreWeave and other players in the AI infrastructure play. Like Steve mentioned, if it drops a lot lower, I mean, I'm just bullish in the whole AI infrastructure build out. It's not going to be a thing that's going to last forever, right? I think there's eventually going to be a time when supply and demand in the AI infrastructure shifts, but it's not any time this year or next year based on what we're hearing from big players. So yeah, AI infrastructure to me is one I like a lot.
Yeah. That makes sense. I'm not currently holding Oracle, and actually I have a very similar view to Neil. Nebius is the name of the game for me right now, and not having to worry about the debt structures or having potentially other forms of revenue that might dilute away from what I actually really do enjoy, which is the main cloud business. But their close relationship to OpenAI is still very exciting. We'll see. I'm sure there's going to be a lot of questions about the recent rumors. Do you guys have any, commentary on that? Like, the recent we're backing away from the Texas data center expansion. Oracle said that was false. There was some potential rumors that they're looking to potentially just build data centers directly with NVIDIA. What are some of the comments that you have there, Jose?
Yeah, so there's a lot of, unfortunately, with OpenAI and Oracle, there's like so many contracts and so many different things that they're working on that sometimes it looks like when if they're not going one direction, it means like everything else is canceling.
Sure.
For example, with the Stargate, right? So Stargate is this future 10 gigawatt potential AI infrastructure. Now, within that 10 gigawatt, they've kind of announced it over time. They announced it, I think, in two varies. First was like a 2 point something gigawatt solution. And then there was like a 4.5 something. So in total, they've already kind of done about 7 gigawatts of structured deals about it. Within that 4.5 gigawatts, there was also an addition where you can expand that 4.5 gigawatt to, I think, 5.2. I forget the actual number, but there was an expansion in that if they wanted to expand within that site. That's where they're not deciding to expand in. And I don't think it's necessarily the worst thing eventually. In this AI market, especially with AI inference, you're going to want to have your data center solutions closer to where the demand is, very similar to how cloud players are right now. And just a year ago, I thought we saw rumors of like Microsoft ending some data centers. And it's not that they're ending a data center. It's like we thought we were going to need the demand, let's say in New Jersey, but we actually need the data center demand in California instead. So it's like, it's not a shift in the compute needs. It's just a shift of where the compute need is needed. So
Wow.
while they might not go in the Texas facility, I think they mentioned that they're working with them on, I forget what state it was, Oregon or Washington, one of those states that's where the expansion comes. So I think the market right now is trying to find, again, any reason for this AI bubble to pop. And deals like this happen all the time in the data center where you had the ability to expand, but then you decided or figured out that you needed it somewhere else, which was A-okay. And no one used to blink an eye back then, but now because of this AI story, it automatically means AI doom story in the ecosystem.
Steve, what do you think's going on with oil right now? If you can speak right now, I don't know if you're muted.
I'm trying to do two things. I'm on hold waiting for somebody. You asked me what I think about oil right now?
Yeah, just because we've had quite the stark price today before the market closes here. What are your opinions right now? We're down about 8.5%, but this was down like nearly 18% at one point today.
Yeah, because there was a false report that a ship from the U.S. made it through, and then press secretary had to come out and correct it. Look, the reality is that 20% of energy flows through the strait, and China's being largely impacted right now, along with India and some other nations. U.S. built increased supplies last week. I think this is a nothing burger if this gets cleared up soon. The big problem is, what does the consensus CPI report say tomorrow? So nobody cares about February anymore. It's a backwards looking report. The bigger thing is, what does the CPI for March look like? We're at the beginning of March right now. So I think it creeps higher. And then if we get an increased inflation report next month with even higher consensus for April, it's going to push the Fed against the wall, and you take one cut off the table potentially, because higher oil equals higher input prices. It equals higher transportation costs, which are key recipes for increased inflation. You can't just start cutting when that happens, and it also makes it a risk-off narrative and hurts the growth narrative. So this needs to be over sooner than later. I think it will. Saudi Arabia can only ship so much through the left side. I forget what that little river is called, but the majority of their oil, along with the UAE and Kuwait and Iraq, goes through the strait. So this is going to get resolved one way or another in the next week, I believe. I could be wrong. I just think too much depends on that strait being open. So I wouldn't be surprised if oil's back at 75 sometime next week.
There's a lot of potential. I don't know if this is rumors or not. Even Trump is getting around to commenting on escalation of putting mines in the Strait of Hormuz. Trump said that if that actually does or did happen and they didn't get intelligence of this, that the quote unquote the military consequences to Iran will have been at a level never seen before.
Now, I don't think Iran should play around right now. I mean, the U.S. just took out, and I don't think anybody likes war, but the reality is that this is not an administration to play around with.
Neil, Jose? Neil, are you following the oil names?
The oil, I was actually surprised that the actual oil names don't really move. Like if you look at Chevron, yes, year to date it's up, but over the past week, I don't think it has moved that much. Even, okay, I did post, I think a couple of days ago, the tankers, the companies, I think THT Holding, they're up significantly year to date, but over the past couple of days, I think they went down already. What I do know is that since Monday, there has been a lot of flip-flopping going around. Oil reached $119, then it crashed 30%. Every headline can move the price, whether it's up or down. If it can go up 10% in a minute, it can definitely go down 10% in a minute. I don't really pay attention that much to it right now, but as Steven said, if it does stay higher for longer, it's definitely not good for the potential 2 rate cuts for this year.
Jose, anything?
No, I mean, I'm just following what's happening, but I want to say I'm not smart enough to determine how it's going to affect my stocks or anything. So I just write it out for my own company. So I'd rather hear Steve, you or Neil talk about this instead.
Definitely not me. I'm on your side here. I want to know more about Oracle, though, as the market's about to close here in the next 2 minutes. Currently, street expectations is $16.9 billion of revenue for this quarter and $1.55 for EPS. I'm curious your guys' take on if we end up beating and then also if we end up pumping. Sort of 2 separate questions I'll go around, Neil. Do we end up beating and does the stock pump after earnings?
Okay, so right now, options market indicate a big move, which we're not surprised. Polymarket says there is a 75% chance. Polymarket, people are betting on the fact that it should be a beat, 75% chance of that happening. Do I think they will be correct? I don't know. It's a betting market, either yes or no. I couldn't care less. But the result, if they do miss, a tiny miss, if comments during the call aren't good, Capex is increasing, but the money isn't flowing back into Oracle, even though this name is already beaten down by a lot, it can go lower and it will take every neo cloud player down with it. No question about it. Now, on the flip side, if suddenly they do show some strength, we know the RPO is huge, but then again, that doesn't mean much. But if they do say that, look, we are going to start to recognize a big amount of revenue next quarter or in the next couple of quarters, then yeah, the stock pops and everything else pops as well. The headlines are going to look a bit different, but they have a lot to prove. That's the thing. They have a lot to prove because free cash flow doesn't exist for Oracle, and they do have a mountain of debt. So we'll see what happens, but yeah, they've got a lot to prove. Plus, Larry Ellison has to fund the acquisition of Warner Brothers pretty soon, so he needs Oracle stock to go up.
Market's about to close here in 5 seconds. I just put a poll in chat. Will Oracle pump or dump? Currently, 65% of people say dump. Let's see. Supposedly, we get the numbers at 4:05. Stock market is now closed. I don't have a bell. I'm sorry, guys. I have this.
What the hell is that metal straw you're using?
It's a metal straw. Yeah. Plastic's bad for you.
Was this the quarter that I always forget, like a month in AI time is like 3 days in real time. Was this the quarter that they took this massive debt for building a huge amount of cash? Did that happen recently? Something about $50 billion that they wanted to take out. I forget what was the actual number, but they were going to do with a mixture of debt and then a mixture of selling shares. I don't know if that got executed or
in February.
It was in February. Okay.
Yeah. $45 to $50 billion of gross cash proceeds during the 2026 calendar year. That's what they expect to raise.
Currently, we are up in the after hours. Might be a little too early to call. Remember, I think the time is 4:05. That's
Yeah,
the
I mean, what I'm worried about right now is their long-term debt reading 120 to 130 billion, while capex increases so much that it overshadows any EBITDA or cash from operations appreciation that we see quarter over quarter and year over year. And that's why I think that we are more likely to see a dump after they report once people go through the numbers. And I will be looking to take a long-term position if the investment narrative stays the same, because the forward estimates on what they are looking to produce are so strong. When I look back at Amazon, Alphabet, and Microsoft, I think Oracle's 2 years behind on the cycle. And if I'm correct doing my math, the next, not next year, but the following year could look incredible for Oracle. So this goes down, I'm a buyer.
That's fair. That's fair. I think the capex is, if it's like any of the other big tech names, it's going to be way more than people are expecting currently.
Yeah, but the difference is, unlike the others, Oracle is in a negative net debt liquidity position to the tune of 80 billion. They only have 19.5 billion in cash / short and long-term investments and 99.8 billion in debt. So they're already on a slippery slope.
The Ellisons just they swallow up debt. It means nothing.
They love it.
Yeah, they love it.
But in a lower rate environment, if we end up getting 2 or 3 cuts this year, and if we get a cut or 2 next year, pretty sure they're going to be able to refinance a decent amount of the slate, which will expand margins. There's a lot of things long-term that can go right for Oracle.
Okay, I have all my pieces of news here getting ready. We're going to try to get the earnings as quick as possible. I'm on their investor relations.
I don't hear you getting
numbers. I'm talking directly to you, Neil. If you get the numbers before me, shout them out. Do not post them in chat.
Is that what he did last time?
Yeah, he just like texted. He's like, I texted it 2 minutes ago, and I was like,
I work in the shadows, my friend.
You got a microphone, brother.
Tanner, you need a Bloomberg terminal.
Yeah, I mean, we all don't have the money like you do, Steve. So,
I mean, I'm not getting one. There's no reason for me to get one.
I know you won't even get Fiscal AI.
Hell no.
You you don't want anything that's not Google Sheets.
Makes me remember the numbers.
Yeah.
Sometimes I don't have time to go back to a spreadsheet. I need to be, Johnny on the spot, ready to go.
Let's see. Coming up, 1 more minute is the expected time for Oracle. We're just sort of waiting here, slightly in the green. Up 0.6% currently. Jose, any last thoughts before it all kicks off? Pump or dump?
I'm leaning more to dump if that capex is high.
Gosh. And then what does that mean for the market if Oracle dumps?
Nothing.
Irrelevant, yeah.
All right.
But I mean, being the last player, I think. Yeah, I guess that's the other thing.
Remember, guys, expecting 16.9 billion. Okay, big green candles to start off. 405 just came in. Algos have it. It's likely meaning some form of a beat here, but let's see as we start to get the real news and they start to see Capex heading even higher, up 3% now. 4%. Oh, and okay, let's get these numbers.
I've got nothing so far, just letting you know.
Double beat. Earnings per share, $1.79 versus $1.69 expected. Beat by 6%. Revenue came in at $17.2 billion, a beat by 2% over the $16.9 billion expected. EPS is up 22% year over year. Revenue is up 22% year over year. Double beat so far. It's a good sign. Stock up 4%. Steve, I don't know if you get your buying opportunity with these kind of candles.
Go to the balance sheet and the press release. What's the debt at?
I don't have those kind of numbers. I have top and bottom line right now.
I mean, that's not good enough, Tanner.
Dude, no Bloomberg terminal.
Listen,
what can I
you're
say?
failing right now. You are failing.
I'm trying my best.
The two big numbers right now is what did the long-term debt come in at, and what did they spend on Capex versus cash from operations being generated?
Someone did say that, let's see, we expect revenue of 67 billion and capex of 50 billion for fiscal year 26. For fiscal year 27, we are raising total revenue guidance to 90 billion. I don't know if that's true or not, but that's what I'm reading for now.
Yeah, for fiscal year 2027, we're raising total revenue guidance to 90 billion. And what were they expecting originally? Does anybody know?
I can pull it for you.
Because right now, this is their third quarter. They just reported quarter 3. Yeah, Q3 of fiscal 26.
Yeah, so they increased their Q4 guidance.
So the street is looking for 66.95 billion revenue this year and 86.37 billion next year.
Yeah, so they mentioned
so they beat.
Yeah, 90 for next year.
Okay, so they're coming in about 3.3 billion ahead of estimates for next year, supposedly.
Mm-hmm. And 50 billion for capex for the fiscal year they're in right now.
I mean, look, this is good what's happening on the chart, but until we hear what they say and see the debt, this could be a head fake.
Congratulations. People did not really put this in. I mean, a lot of people are putting on the poll that they want it to pump now, but that's after the fact. I mean, the high majority were saying dump before the numbers actually came out. So up 7% on Oracle.
Are any of the other players moving, like your Nebius, your CoreWeave, your RN?
Let's see here. Nebius up 1.4 in the after hours. CoreWeave up 1. Iren up 1.5.
Yeah. But they were up today anyways. A nice amount, I think.
Yeah, but that's all after hour movements.
Yeah.
Which is still pretty good. Like after hours on Nebius being up 1.5%, that's pretty solid. Right at 405, by the way, as well.
The big tech companies are not really moving much. Nvidia is up 0.3, and that's about it.
Yeah.
All right, I got a lot of numbers. Do you want them, Tanner?
Would love them.
All right. Q3 remaining performance obligations up 325% year over year to 553 billion. You guys said earnings and revenue. We have Q3 cloud revenue, IaaS, which is infrastructure as a service, and SaaS, software as a service, 8.9 billion, up 44%. Q3 cloud infrastructure revenue is 4.9 billion, up 84% on its own. Q3 Oracle Cloud Database revenue up 35%. Multi-cloud database revenue up 531%. Q3 Cloud Application SaaS revenue 4 billion, up 13%. Q3 Fusion Cloud ERP SaaS revenue 1.1 billion, up 17%. NetSuite Cloud revenue 1.1 billion, up 14%. And I'm trying to get the hold on, I have the balance sheet right here, so let me get to it.
Which part are you looking for?
All right, I have the balance sheet. Ooh. Cash and cash equivalents went up. They must have borrowed a hell of a lot of money.
Yeah, they mentioned they brought up 30 billion so far in forms of bonds. They talked about it a little bit under that on capital funding.
Yep.
I don't know whose screen it is, but Oracle raised 30 billion through a combination of investment grade bonds and mandatory convertible preferred notes. One thing I did right there, exactly there. Yeah. Like the second line, within days of announcement, Oracle raised 30 billion. But it seems like they still haven't done the at the market equity portion. So that I wonder if that could create some short term on the price, because they still need 20 billion that they need to raise out of this 50, and it seems like that's going to be at that market equity side.
Yeah, their net liquidity is roughly the same, 38.4 billion in cash and cash equivalents, but they now have 125 billion in debt on the balance sheet long term. Where's the cash flow statement?
Neil probably just finished his script for his next video, for his Oracle video coming up. This guy can produce videos, I'm telling you.
I should work for Netflix.
Oh, that's funny. Stock holding up pretty well, though. 6.6%, 6.7% here in after hours.
This can't be. No, okay. This is the balance sheet.
So they did add $29 billion extra to that RPO, and they say they don't have to raise any incremental funds to support this contract. So that's a pretty good thing.
That's 553 billion or something now?
Yeah.
Crazy.
So their cash from operations this quarter was 17.4 billion, and their Capex was 39 billion. Wow.
So I know it didn't fall to 125, Stephen, but the numbers might be better than you expected. Are you looking to still potentially buy?
No. I was only buying this if it fell and was a super deal. I'd rather be in Microsoft or Amazon or Alphabet or Meta and wait, or NVIDIA. This needed to be like a no-brainer deal for me to allocate capital.
One thing that I thought was pretty cool for them was about their RPO. I know Steve mentioned it, up 325% from the last year, up 29 billion from the last quarter. But they mentioned that most of the increase in RPO does not need for them to raise any incremental funds to support these contracts. So,
Jose, you're like Pumbaa in Timon and Pumbaa. When I say something and you don't listen, and 3 minutes later you repeat the exact same thing what I've said.
So you're Pumbaa? Did you talk about this already?
Yes, 3 minutes ago.
You sure you were muted?
No, because Tanner responded.
I was too busy reading.
So much easier being the host. All I have to do is listen here. And I don't follow Oracle at all, so I'm just making sure that we have the video ready to go whenever you guys read through the actual company. I'm going to make sure we have the webcam or the webcast for 45 more minutes. And I don't know if anyone follows this AeroVironment, but this company went down 2.5% today, and then another 10% after earnings.
Is that an airport in Mexico? No, it's not.
It's the drones defense types of companies.
Yeah, not great. Oracle up 7, however. I find it crazy that the number one metric that they're showing off, like whenever you see a company, for SoFi it might be new members, for other ones top line sales. This one, remaining performance obligation, is the number one metric that they're showing off. I don't think that that's very common.
Well, I would say for the AI infrastructure players, it is, right? I mean, that's what I know CoreWeave does it. Does Nebius not share RPO? No, right?
No,
not that
just
I can
ARR.
Think
of. ARR. I also wonder if it's different customers, all about, I guess, the contract length as well. Because I know Amazon does it, right? I mean, Google does it as well. Microsoft does it as well. They all so it's very common, I guess, in the cloud space. It seems like Nebius is the only one. Does Aaron do it? No, Aaron doesn't do it either, I don't think.
Well, I think Amazon and Google and all them do it, but do they really?
It's not the first thing.
Yeah, they don't really throw it in your face. I think Google even, I think they might have said it on the like you had to wait or something for the earnings call or something.
Mm-hmm.
I guess for them, because the story is they're spending so much money, they have to really show you, look, this is why we're spending this money. This right here is where all this money is going to go to.
Steve said in chat, but not willing to share with us. I'm not convinced that
What?
the market is not selling this off.
Yeah, I'm not. Once the earnings call happens, anything can happen with this. I mean,
You
they
think we
can
could see a
say
big-
some stuff that the market just interprets the wrong way.
Okay. That's always very scary if the numbers are good, but the message is not.
Yeah, but think about it. Nvidia's numbers were the best numbers we've ever seen from a company, and it went down.
Well,
Oracle,
it didn't sell off on earnings or on the earnings call.
okay, it sold off the next day.
Yeah.
So Oracle's pumping right now because they had a double beat, but they could get on the call, start talking about all the capex they're going to spend next year, et cetera, et cetera. And when the Q&A happens, they could answer something the market interprets differently, and this could be under where it started at. I have no idea what's going to happen, but I would not be surprised if this sells off.
Yeah, I'm going to be curious if they do talk about capex for next year, even though it's only Q3. I think the market now is just looking, hey, what are you going to do next year? Because what is it, 50 billion for this year that they expect to spend? But if they increase their guidance for next year, does that mean that they got more power somewhere, more AI infrastructure that they're going to need to put more GPUs into? So does that lead to a bigger capex than previously expected? So would hopefully some analysts ask, what's your 2027 looking? Is it going to be some incremental growth? Is it going to be flattish? What's the story here?
Yeah, that organic growth statistic is still pretty interesting here. So just looking at the total numbers, this is, if people didn't end up hearing from the beginning to now, this was a triple beat. Raise on guidance, beat on revenue, beat on EPS, RPO increased. Quadruple beat, as Steve would say. Right, Steve? Is this a quadruple beat?
Looks like it.
Okay. So none of us are playing this name. No one cares about Larry Ellison's Oracle.
Well, look, it's more important what they say because the narrative has been so bad on tech, or I should say hyperscalers and the CapEx spend. This could spook the market or it could give it some level of confidence.
Yeah, but what do you want them to say?
I don't want to say what I want them to say because I don't want to give bad mojo to the market because I'm looking at it selfishly.
There is not enough people watching. You can go ahead. You can safely say without the market moving.
Look, no, not because of that. I just don't like putting that stuff out there, but I wouldn't be mad if it goes down. Let's just say that.
I see. Those are selfish reasons.
That's why I said it's 100% selfish reasons. I would not be mad if it goes down.
Let's check NVIDIA and AMD as well. NVIDIA up 0.2 here, and AMD up 0.2 as well. The Nebiuses and IRENs, CoreWeaves, all up roughly about 1%. The Mag 7 names not really moved by this change at all. Are there any infrastructure names or almost Oracle proxies that you could also look at too? I know obviously OpenAI and stuff like this, but they're not public. So what would be the next sort of name to look to?
I don't know if they have any PowerShell contracts with any of the big companies. I know one that they use for the Texas is Crusoe, or I forget what it's Curso. I forget what it, the
I think it's
but
Crusoe.
they might have some public PowerShells, but I'm not too familiar. Maybe someone on chat who follows it a little bit more may be able to tell us.
Bloom Energy, someone said.
I know one thing that is very interesting with Oracle, and it's their whole storage platform. I think they talked about it last quarter where he mentioned not the CEO, but the CEO mentioned that that's one of their growth opportunities, that right now enterprises all have their data within kind of like this Oracle database. And if you want to kind of create a more secure AI agents or kind of fine tune some of these AI models, that would be like the easiest way to do it. So they have like a great cross sell to more AI compute and AI capacity. So we'd love to hear anything on that for some potential growth rates there.
Neil, this is a little bit separate, but I was curious your thoughts on some of the recent changes, like the Nemo Claw update that NVIDIA ended up putting out. Do you think that this is, going to change anything, or just sort of a standard from NVIDIA to put out some open source software to help the AI ecosystem?
No, I don't think it's that big of a deal. I mean, when is GTC next week? Probably next week. Wouldn't surprise me if they talk with, or if they talk about this and bring some enterprise folks on stage to talk about how they are doing this. It is interesting that it can run outside of NVIDIA's devices, so that's good for the whole ecosystem to expand. Good, in my opinion, good for a company like UiPath. People say it's bearish, but I do think that it could be bullish for them if they execute correctly. Because I know we've talked about deploying AI agents throughout the enterprise and whatever with OpenClaw, but then you have security issues, etc., etc. So if you want to deploy agents, I guess having a so-called AI agentic layer like UiPath to control and make sure that everything is secure could be a good thing. But does it change the whole story? Not much. Just like Meta buying Moltbook, also to me doesn't really change. Doesn't change much. Like what's I don't know what the heck they're going to do with it. Advertise to AI bots? Probably not. It's probably not another acqui-hire type of move to expand their AI super team that they have.
I think Meta or Zuckerberg just saw social media that was growing that he wasn't a part of, so he thought, let me go ahead and acquire this. I don't care if there's humans or bots. I have to own it.
I think with Moltbook, I think eventually there's going to be a world where AI agents are going to be doing a lot of our purchasing. So I don't know how it's going to correlate here, but just like how our phones collect all our data, I think I don't know how far of a future, but in the future, AI agents are going to have pretty much all our data. So that would be like the easiest way to be like, what does Jose really need to do? So I wonder how that Moltbook helps, if any, with data collection of users or something in there. But that would be my closest relation there. I actually want to share some thoughts on that Nemo Claw. I actually think it's a really big deal. And exactly why Neil mentioned it, though. Neil was going in the right direction. Right now, enterprises are not using AI agents to like OpenClaw because of that security reason, right? Because of that security reason, a company is not going to want to put these stuff out there. But if NVIDIA is out there able to create this open source solutions, how many new enterprises are going to say, look, we can now try this AI agent. Now you're going to give all these employees an AI agent that's going to be able to do multiple tasks. The demand of tokens would increase dramatically, which would then push for more AI infrastructure needs, for more AI solutions. So I think it's a nice pickup for the overall market, because the enterprise place is definitely the place to kind of see that token explosion right now. I don't think we're in that consumer space. So if you can get more people to go into the enterprise space and see that token explosion happen, I think it would be really good for the whole AI infrastructure market.
Oracle now up nearly 8.2% right now. So big explosion, the opposite of what Stephen Fiorillo was looking for, the shorter of Oracle. Absolutely hates this company and wanted it to fall, but he did not succeed. So congratulations to all the bulls.
I didn't say that I hate the company. I just said if it fell for the wrong reasons.
We all heard what you said. We know exactly what you said. You said you wanted the bulls to lose money. So
I did not say that, you know it.
So for the actual earnings call, Neil, Jose, do you guys want to listen to the earnings hub thing? Do you think that was beneficial last time, or do you just want to listen to the webcast, like the official one?
I mean, I think the official one should be an interesting one this time because they do have a lot to tell us.
Do you know what I'm saying? Like in terms of
because it had the chart. Remember, Neil?
Yeah.
I thought the chart was fine. I think we saw some movement. It gave at least some reason to some of these people to see. Because if now you can't share a chart right down. Not that I care, but I know the viewers care. I think the viewers care. Not that I care.
Let's do with the chart so we see exactly when and what words screwed everyone over.
What
Yeah, I
time's the
mean,
call start?
Steve?
What time's the call start?
5.
Oh my God.
That's when calls start. That's when they that's when we start. I mean, hey, this guy can't hang out for an hour with me.
No, I'm just saying. Usually they start around 4:30. Some of them.
There's like 2 companies that you can name. You're thinking of like Meta, and then that's it.
That is definitely the one I'm thinking of. Good old Zuckerberg.
I said 2 just to give you a buffer, just in case you had, you and Neil follow.
By the
1,000
way,
companies,
Tanner,
so.
the White House card sucks.
Say that again.
The White
The
House
UFC
card
one?
absolutely sucks.
There's an official one.
Yeah.
What planet do you live on?
The one that's been I've been monitoring different situations. I've not been monitoring that situation. You know,
They should have put Connor on it just for the fun of it.
but isn't he banned?
Man, he's not banned to fight on the White House alone. Nobody's banned to fight on the White House alone.
I mean, it's a White House card. The fact that you are not going to have John Jones, Connor, or Nate Diaz fight is crazy. It's crazy. This would have been an awesome regular UFC card. But you made this whole big deal about it being outside on the White House lawn, and you don't have those 3 fighting on it. It's crazy.
I don't know. Maybe they just said, "Hey, can we pick a card with no legitimate criminals on the card?"
Hey, Connor's trying to become president of Ireland.
That's yeah. And you want him to step on U.S. soil and
Technically, Trump's a felon, right?
I'm a Canadian. I don't know what I'm talking about.
No, I wanted to see Connor Nate 3. I wanted to see Jones Pereira, and I wanted to see Ilya and freaking Makula Islam fight. Those 3 would have been incredible.
Oracle stock up 7.6% now. Let's see.
Steve, what was the cash flow number that you set at the start?
For Oracle,
Yeah.
For the quarter?
for the quarter was 17.35 billion. And
I see
they
11.
spent 39.2 billion on Capex.
It for the quarter, I see a
No, this is for the 9 months.
I'm still not seeing that.
I
For
guess
the
he calculates
past 9
it.
months, it's 39 billion in Capex and 17.4 in cash flow from operations.
What was the capex this quarter? I'm seeing 18.6 billion. Does that sound correct?
I don't know. I'm only seeing a 9-month number.
Wait.
Hold on.
This is the
For the quarter. No.
this is the quarter that or free cash flow that I'm seeing. Negative $11.5 billion for the quarter, then nearly negative 10 billion the last quarter, and then about 300 million the quarter before that.
Where did you get those numbers?
Fiscal AI.
Ah.
Yeah.
Yeah,
I
no,
dare
'cause-
you to
'cause,
talk shit.
No, because I'm looking at the
All right,
website
something's
and it's
not
giving
right.
me trailing 4 quarters Capex is now at 48.2 billion
Yeah, Tanner, bring this up.
For the year,
for the trailing 12 months. Yeah.
I'm seeing 48.25 billion as well.
You know
Okay.
what? Forget it. You are correct. It's 48 for the trailing 12, and it is 39 for the past 9.
Yeah, if I just throw this down,
Okay, so last 12 months free cash flow is negative 24.73.
yeah,
It's so bad.
Yes, and it has increased by quite a lot since Q2. Q2 was negative 13.18.
That's wild.
look at that graph, eh?
Flip it.
Yeah, free cash flow up 7.6%.
And the thing is, if you look at free cash flow estimates, they are expected to stay negative for a long period of time, based on analyst expectations.
What does a long period look like?
Stretch it on Fiscal, and it's not, you're not going to see it go up like with Meta or Amazon or anything like that. For
I didn't know
Oracle,
I
it's
could do that for
expected to
free
stay negative for free cash flow.
Yeah. This is the next 3 years
Mm-hmm.
versus where we are today, and then where we'll be 3 years out. Estimated.
Yeah, estimated.
Yeah.
It's barely improving for the next 2 fiscal years.
Yeah, don't worry. It's just an estimate. I can get a lot more red than that. Or green.
Jose, you have a nice shirt.
Say that again.
He has a nice shirt, Jose, an NVIDIA.
NVIDIA,
one.
I am AI.
Okay, let's check out
Bumble earnings.
Bumble report.
I think so. I saw it on the eWhisper's calendar.
I didn't see that.
Is there anything else this week that's pretty cool? Is Adobe this week?
UiPath, Adobe on Thursday, Rubrik on Thursday.
I said cool. I didn't know that.
Yeah, Rubrik, Sentinel-1, Adobe, Alta, Lennar. Everything's on Thursday. UiPath, I guess.
tomorrow. So
Yeah.
that thing either soars or crashes. It's every single quarter the same story.
UiPath, and then
Yeah, why does that stock MUX have a picture of a guy? Is the CEO? That's the logo.
Yeah, I guess. That seems like a mistake. Is this the famous dating app? No. Bumble. You're thinking of Grindr. Bumble is the females have to ask first. They have to talk first.
What a privilege.
Yeah, I was never good on the dating apps. I had to stop. At first glance, I'm pretty ugly, so just no one messages first. I'm locked out. So, I had to show them my money, and then
The YouTube account.
my SoFi shares, and then that's how I landed the girl. Yeah.
This is the way.
Did you guys see TSMC's numbers today?
The 30%. What is it?
I haven't,
30%.
so I'm curious to see if it was good. Was it
They do
30%?
another monthly metric thing.
And Jose,
Yeah.
you are slacking, huh?
It's just I know it's gonna be good. That's the thing. I don't know. I'm just not worried about this cycle just yet.
TSMC's sales rose 30% in the first 2 months of the year. So hold on a sec. Then what was their actual metrics? 29.9%.
Month over month or year over year?
It's a little confusing, actually. February doesn't look that good. Month over month was a decrease of 20.8%. Year over year was 29.9%.
I have 22.2%. Kind of. Wait.
Yes. Yeah, you are correct. That was the increase year over year. Just for February.
For February,
The number that I gave was the combined total of January and February.
Okay.
You are correct. Are you worried now?
No, not at all.
How can it be?
Up antenna?
How can it be that different from January to February numbers?
I wonder if there's any holidays in February over there.
And it's a shorter month overall.
The
but
Chinese New Year maybe, but I'm not sure. Not Chinese New Year, definitely. Let's see if last year was the same thing. Maybe February is just a week.
I was gonna say if you plot all of them, just plot them all with AI really quickly, and you'll see it's never a straight line a month over month.
That's fair. That's fair. Okay. No, I appreciate you keeping me up to date on that because I didn't even see that. You have the calendar set. I
just see it on X sometimes.
So February is of last year is a month where yes, it goes down month over month revenue wise.
So Steve, you've now seen all the biggest names report earnings.
Mm-hmm.
And then after Steve, we'll talk about AeroVironment. We have all the numbers here as well. Can you sort of rank them for us in terms of the companies that you thought had the biggest blowout quarters, including Oracle?
I mean, NVIDIA is number one. There's no question about that. I mean, it's not even close. Hands down, blowout. I mean, I have to go and look back at it. I mean, Alphabet's quarter was incredible. Meta's was really strong. I thought Microsoft's was really good. The market didn't like it. I think they're going crazy. I think they've lowered. They didn't like 38 on Intelligent Cloud. They were looking for 40%, which I think is bull. I'll try not to curse because for some reason your channel is a bunch of little kids. Let's see. Now it's meant for 10.
No. Hold on. My channel are such adults that they have a bunch of little kids and they're raising families. Okay.
Right.
This is a family.
I make
channel.
sure that I put on my videos that my videos are not made for kids because I can't control what comes out of my mouth. Anyway, I didn't think Apple's quarter was that great relatively. I think that Apple's quarter, look, it was a good quarter, but it wasn't anything to go crazy about. And I think Amazon is underrated. I think people are worried. Amazon was the biggest surprise because the quarter was really good and the market got really angry that they're going to do negative free cash flow in 26. But they seem to not realize that in order for them to do negative free cash flow, according to the Bloomberg report of 524 million, I believe it was, when you spend 200 billion on Capex, that means you have to generate over 199 billion in cash from operations to get negative 524 million on free cash flow. And that means that their cash from operations grows 60 billion year over year. So I think Amazon's the one right now I'm really focused on now that Oracle didn't decline. I got to take this right back.
based on analyst estimates, though. That's all right. Steve told me before we got on the call that he hates listening to earnings calls without a pizza, so he's just ordering a pizza right now.
That sounds good.
I'm also
That should be a show, pizza and earnings or something like that. But I'm also just hungry. Quick thing, Tanner. I was looking. 14 out of like the last 16 Februaries have been down compared to January. So for a little bit over a decade, it's a very, you see a nice drop on the month-over-month basis.
I definitely believe that there would be a drop from January, but what's the average drop? Is it 20%?
There's been somewhere, it definitely looks, let me see if I can share screen really quickly.
I see a bunch of comments being like, Steve called us a bunch of babies, but he's the one that drinks milk and cookies.
I think last year was 12% drop.
I mean, yeah. What else? What are the years before that? Also, how are you getting these numbers so quickly? Where are you getting these?
I'm on
I shared a screen real quick.
TSMC's monthly revenue website.
So you're just pulling up the individual quarters?
10.
Yep. I see.
I share a screen. Well, the pink is January's, this pink right here. So, I mean, here in 2023, you see a huge drop. I'm pretty sure that's more than 20%. In 2024, you saw another drop. So all these pinks you seem like, I do think at least most of them look like at least a double-digit drop compared to January, February. But then it's just...
What Substack do I have to follow to get it to see charts like this?
What the shit happened? But no, I mean, I just copy and paste all that data that they have into, I forget where, Claude, and they just give me some great charts from it.
Okay, I see, Neil. Thank you.
Voila. You're welcome.
I see. I thought it was just the individual reports, and then you're pulling but they have a historical monthly revenue.
Yeah, they have whole for the past 20 so years or so.
You can have fun with Excel after this, Tanner.
I've been known to. By the way, oil not stopping its climb here. So I honestly think the more it rises, the more that the markets will face a sell-off tomorrow. We'll end up seeing how that sort of tracks.
Where is it now?
Where is it now?
Mm-hmm.
Oil or the market? Market.
Oil.
$87 a barrel.
Okay, so... And as long as we're not going back to the high 90s, I think for now it's okay.
It just felt so good whenever it was at like $77, $76.
Yeah, but it also felt horrible at $119.5 for 5 minutes.
I took that day off. Yeah. Parsival in chat says oil will hit 120 in the near term. Definitely can. I mean, that's for sure. The call starts at 5 o'clock, ladies and gentlemen. Steve will be back by that time. He'll have his food ordered, ready to go. And then we listen to the great and powerful team of Oracle. Probably talk about their partnerships with OpenAI and other businesses like this. Are there other massive names that publicly are working with Oracle?
XAI, I think Meta too.
Mm-hmm.
I think a lot of the big players and Oracle Cloud customers.
Did you say CoreWeave last time or not?
Is CoreWeave? I wouldn't. Is CoreWeave part of it?
I don't know. I think
I don't
maybe
think so.
or maybe not.
They used to have a really nice slide of all the kind of AI companies they worked with, and for some reason they took it down.
Okay.
They do own 80% of the American entity that controls TikTok's US operations. So,
ByteDance, yes.
so
Which is
ByteDance,
big.
yeah.
I mean, if
Oh,
Meta needs all
yeah.
that compute, ByteDance is gonna need somewhat, not to the same level, but
Not far, probably.
Yeah. Yeah. In terms of the AeroVironment that ended up showing off earnings, it looks to be a triple miss, by the way. For
Triple miss.
triple miss. Yeah, they way worse than expected on revenue. However, I mean, revenue's still growing like crazy, up 143% year over year, but it came in at 408 million versus 484 million. A miss of nearly $76 million of revenue. EPS came in at 64 cents versus 72 cents expected, and guidance came in much lower than expected as well. The estimate was came in higher than even their high side of guidance. So, yeah, you definitely have to lower guide then as well. Lower on adjusted EPS for guidance as well. Stock is down over 10%. Steve, you done ordering your pizza?
What happened, Tanner?
You said you texted me. You said you have to order a pizza real quick.
I did not text you saying I need to order a pizza. What are you talking
Is this not you? I keep getting messages from this guy. I thought it was you. Sorry, go ahead. Tell us what you were doing.
Oh, I'm trying to not be declined with my credit card so I can get to LA.
Yeah, everyone in your chat's asking about pizza toppings because of me. What toppings you get? Man, I don't know why. Like, obviously, like, lying's no good. And saying that someone said something when they didn't, absolutely not good. I do not encourage that. Okay. Saying Steve did something or said something whenever he didn't, hilarious. And I will continue to do it. It's beyond funny. I don't know what it is.
wait, I missed it. So Steve is not getting pizza?
Not at all.
There goes Jose's idea of pizza and earnings.
No, I just thought, harmless fun. He probably had this very serious business meeting or something that he has to go attend, and I'm like, no, he's getting another 2 cheese pepperoni large pizza. Yeah, Steve was calling Vlad. Congratulations, by the way, Steve, on that podcast.
Thank you. Appreciate it.
The Hood podcast.
All
where
of them.
Steve found out that they were delivering cash via Uber.
Dude, that was really impressive.
But would you ever use it?
Instead of going to an ATM, yeah. They're not going to ask me questions. Sure.
That's fair. I still think you have to pay a small fee, but I don't think it's much. And Couch, Neil, congratulations on your recent interview, CEO of Oscar Health.
Thank you very much. Thank you. Was fun. Good guy. Impressive.
Nerve-wracking?
No, was okay because we joked before we went. We recorded, so the ice was broken.
Yeah.
Thankfully, Jose wasn't there because otherwise Oscar Health would have crashed because every time Jose is there, Oscar is going down. When we used to stream, and then he retired. Then he came out of retirement and went solo.
For no reason at all. Neil just doesn't want to join me. He doesn't at 11 o'clock.
You see me in your chat every single day.
Everything. This is how rumors start now. You see? This is how rumors start.
It's going to be the love-hate relationship like HIMS and Novo Nordisk. Never seen something in my life like this. HIMS and Novo Nordisk.
That
Every
is
time.
crazy.
Stock is down 20%, stock is up 40%. We like you, we hate you, we're going to sue you, we're going to partner with you. I've never seen something like this.
Yeah. No, it's who knows? Maybe it ends in another lawsuit, but right now it does look like they're in good standing. I personally think it's going to hold steady. Not at this price, but I mean the relationship that they'll stop the fighting. I'm curious your thoughts.
I honestly don't know anymore. Novo is, I might or might not have spoken with people inside the company, and they were not surprised with what happened in 2025. So they first have to clean up everything from the inside before things get better for the stock.
Yeah, Jose's jinxing Oscar. Sounds like it. I'm learning this as well.
I don't even say anything about it. It's just my presence. I don't think I've said anything. I don't even know what they do, if I'm gonna be honest.
I've always wondered why Nvidia has just not gone up recently. It's just been flat. It's because you're covering it too much these days.
That's exactly it.
But that's why the AI trade's on pause right now. Who knows?
I'm gonna take a YouTube break for the next 2 months.
Yeah, unbelievable record break. This is a record-setting rally. We've never seen anything like it. Yeah. Okay. Call is in about 7 minutes or so. So we will have Oracle on. Let's see if we can get any coverage, by the way.
We are the coverage.
Sorry?
We are the coverage of Oracle.
We are the coverage. I was trying to get some professional coverage rather than us amateurs. Yeah, I don't think any of us hold this. Steve's not buying. But it is important for the AI trade. It's important for tech, SaaS in general. This is an important one to listen to regardless of if you have shares. Now, if you have shares, celebrate. Congratulations.
Yeah, because a lot of these players, they will share maybe some gem about the data center market or the AI infrastructure market that you can put into your bullish thesis for your Nebias, for your CoreWeave, or whoever you own. So yeah, a lot of earnings. Some companies I don't own, but it's just I think you can learn a lot from them of how the ecosystem is moving.
Yeah. Steve, any last thoughts before the call?
He's still busy, I think.
Yeah. They said well done. He doesn't want a well done. No,
we do have some. I compared here Q2, Q3 growth rates. We do have some acceleration in growth for total revenue, for cloud revenue. Okay, RPO, no, but who cares about that right now? The total revenue and cloud revenue did accelerate in growth. So in Q2, that grew 14%, and now that grew 22%. Cloud revenue was 34% in Q2, 44% in Q3. So that's good. Cloud infrastructure, 68, now 84. Cloud application, 11, now 13. So not a bad quarter. Not a bad quarter from Oracle. Free cash flow is thrown out of the window. We'll see what they'll tell us during the call, but business itself is doing a bit better already.
How crazy is this RPO number? It's getting ridiculous. Unreal.
I wonder if they share that slide where they show how much they're going to make each year from cloud. I wonder if it's been updated with this new RPO number.
Because the first time it jumped at that high, they did show it. Maybe last quarter they did show it again, but this quarter, nada.
No, I think last quarter, because it was kind of in the same time frame as their Analyst Day. So I think they showed the updated version on their Analyst Day, which was really close to earnings.
So hopefully they share during the call.
Yeah, hopefully they show something. I mean, it was a good chart to see that a lot of this AI RPO is not this year or next year, it's more years after that.
Yeah.
Nvidia is crazy. The fact that this thing is flat now for, I don't know, 6-7 months is something.
With a forward PE ratio of 22, and that's analysts still underestimating some of that growth potential. It's wild.
The
Still
difference
crazy.
between the PE, Jose, on Fiscal, on the front page and in the ratio, they know about
You
it.
got the
now.
answer?
I mean, they've known about it, but now I made sure they know about
Double
it
down.
for sure.
Yeah.
It's a known issue.
Look at this freaking stock comp as a percentage of revenue on this $500 billion company, $430 billion, 7.7%. Like, it's actually mind blowing. That's pretty freaking high, guys. Climbing.
Just curious, what would be like a typical for like the other Mag 7s? Is it like sub 2%? I something I really don't.
No, I mean, Google's always been
Yeah.
pretty high. I think they're around 5%. I'm sure some of them are higher, but like here we can take a look. Wow, Meta's is actually decently high as well. I would have thought they would have been smaller. I know Nvidia's 2.4%.
Very nice.
Yeah.
They're just growing revenue like crazy.
Apple's 2.5%. Amazon. I was actually surprised by Meta's. That one does surprise me. Amazon's 2.1% most recent quarter. Google's is, I think, around 5-something%. Sorry, 6%. And that's on the higher side.
Interesting that this one and Meta, right, are
Yeah, just a little statistic I was just looking at. It also matters, like, if you're going to have buybacks and that's all factored in, then it's fine. You know, that could just be their strategy to retaining good, talent. But then you need to look at, total outstanding shares over time. Pretty flat for Oracle. That's decent. But obviously, you'd want it going down. Okay, let's get this call up.
Tanner, guess what?
What?
My credit card finally worked.
I don't know what you're trying to buy. Oh, actually, I do.
Plane ticket.
Oh, okay.
I can finally go to LA.
Oh, yeah? When is that again?
The 28th.
Of this month?
Yeah. I thought you were coming.
I was coming.
All right. Doesn't sound like you're coming.
I didn't even know. I thought it was in May.
There's another one in May, but this one, LA is this month. Chicago is May.
Chicago is May. Okay.
Yeah.
What is this secret meetup? Jose, are you a part of this?
No. But I'm guessing it's in the mid.
It's
meetup happening.
It's a
LA
meetup.
meetup.
It's not secretive at all.
It's not secretive at all.
I completely forgot about the one happening here in Jersey. And I was like, I had it on my calendar. I missed it.
It was such a good time.
Wait, you're in Jersey?
Yeah, I'm in Jersey.
What part?
Union.
Dude, my office used to be out there.
I'm so close to Kane University. So,
My office used to be 650 Liberty Avenue.
Nice. So both you guys went right to the New York one.
Yeah.
Well, it was in Jersey, but West New York, whatever.
Okay, I'm trying to get this call up. Right now, I just hear music. So. Wait, I'm hearing two different voices.
This time, I would like to welcome everyone to the Oracle Corporation
hear?
third quarter fiscal year 2026 earnings conference
Do you have
call.
volume?
All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star, then the number 1 on your telephone keypad. To withdraw your question, press star 1 again. We kindly ask that you please limit yourself to 1 question. I would now like to turn the conference over to Ken Bond, Head of Investor Relations. Please go ahead.
Thank you, Regina, and good afternoon, everyone. Welcome to Oracle's third quarter fiscal year 2026 earnings conference call. On the call today are Chairman and Chief Technology Officer Larry Ellison, Chief Executive Officer Clay Maggiore, Chief Executive Officer Mike Sicilia, and Principal Financial Officer Doug Carey. A copy of the press release and financial tables, which includes supplemental financial details on our most recent quarter, guidance for our future results, a GAAP to non-GAAP reconciliation, and a selected list of customers who purchased Oracle Cloud services or went live on Oracle Cloud recently will be available from our investor relations website. As a reminder, today's discussion will include forward-looking statements, and we will discuss some important factors relating to our business. These forward-looking statements are also subject to risks and uncertainties that may cause actual results to differ materially from the statements being made today. As a result, we caution you from placing undue reliance on these forward-looking statements, and we encourage you to review our most recent reports, including our 10-K and 10-Q, and any applicable amendments. Finally, we are not obligating ourselves to revise our results or these forward-looking statements in light of new information or future events. Before we go to the Q&A portion of the call, we'll begin with a few prepared remarks, and with that, I'll turn it over to Doug.
Thanks, Ken. Let me start by highlighting the changes we are making to our earnings press release and this call. In the press release, we have laid out clearly and explicitly the supplemental financial metrics that we otherwise would have provided on the earnings call so that each of you has the information in writing and in advance. Then, as it relates to our approach to the earnings call itself, I will be very brief and then turn it over to Mike and Clay to provide more substantial thoughts on our business. After which, all of us, including Larry, will be available to take questions. In terms of the results for Q3, we had a tremendous quarter that exceeded expectations across the board. Our momentum continues to accelerate, with Q3 being the first quarter in over 15 years where both organic total revenue and organic non-GAAP EPS grew at 20% or better in USD, as we highlighted in the press release. I'll quickly mention a couple things and then hand the call over to our CEOs. First, in January, TikTok US completed the separation of its US data operations from ByteDance into an independent company, in which Oracle now holds a 15% equity stake along with a seat on the board. In terms of impact to our financials, there is no impact to the revenue related to the services we have been providing as their technology vendor. That is continuing as it was. As it relates to the equity investment, we will be accounting for this under the equity method, and we will recognize our share of the new company's earnings for the period from the close of the investment in late January to March 31st in our Q4 results, as there is a 2-month reporting period time lag. It will be recorded as non-operating income or loss on our income statement and is incremental and additive to our financials. Second, in February, we announced our intent to raise up to $50 billion in debt and equity financing, along with a statement that we do not expect to issue any additional bonds beyond this amount in calendar year 2026. Within days of the announcement, we raised $30 billion through a combination of investment-grade bonds and mandatory convertible preferred stock, with a record order book that was substantially oversubscribed. As noted in our release, we have not yet initiated the at-the-market equity portion of the financing program. Finally, I'd be remiss not to remind everyone we are reporting our financial results just 10 days after the last day of the quarter, despite the increasing size and complexity of our business. Using Oracle Fusion, we continue to close and file our financial results faster than any other company in the S&P 500, providing us with a significant strategic advantage, as well as an opportunity to help our Fusion customers do the same with their businesses. With that, let me now turn the call over to Mike.
Thanks, Doug. And as Doug just detailed, we really had an excellent quarter across the board and continue to see strong execution. So let me say a few words about our applications business. Oracle has the fastest growing, most complete suite of cloud applications in the market, full stop. Our SaaS solutions are industry complete platforms with highly scalable, trusted, secure, and regulatory compliant systems and processes in which our customers trust us to run the systems that run their businesses. In constant currency, cloud applications revenue was up 11% in the quarter, reaching an annualized run rate of $16.1 billion. Within that, Fusion ERP was up 14%, Fusion SCM up 15%, Fusion HCM up 15%, Fusion CX up 6%, NetSuite was up 11%. Industry SaaS solutions for hospitality, construction, retail, banking, restaurants, local governments, and telecommunications combined were up 19%. So certainly very happy with the applications growth in the quarter. In the context of that, I'll say a few words about the reported SaaS apocalypse. You've all heard the thesis or theory that new companies coding quickly using AI will spell the death of SaaS. I don't agree with that at all. I do think that AI tools and their coding capabilities would be a threat if we weren't adopting them, but we are, and very rapidly. Oracle is using the best AI coding tools and the best developers, not only to accelerate our SaaS business, but to deliver solutions that enable entire ecosystems across numerous industries. The use of AI coding tools inside Oracle is enabling smaller engineering teams to deliver more complete solutions to our customers more quickly. We are building brand new SaaS products using AI and also embedding AI agents right into our existing applications suites. By embracing AI with small engineering teams, we have just built 3 brand new CX applications: lead generation and qualification, sales orchestration and automated selling, and our new website generator. In fact, we just used the website generator to build and launch the new Oracle.com. We've built these new CX products to help our customers sell, not simply to administer a forecast or generate email opens. These are 3 products that Salesforce.com does not have. And of course, Salesforce.com also doesn't have OCI, the AI data platform, Fusion ERP, and complete industry suites. Complete AI-powered end-to-end ecosystem automation platforms are quite unique to Oracle. In addition to that, we've already delivered well over 1,000 agents right inside our horizontal back office and industry applications. This doesn't even include the agents that our customers are building themselves or the fleet of agents that we're using internally. These are AI features built right into our applications and existing processes. And a great example, I think, is in healthcare, where our brand new AI-powered ambulatory EHR, electronic health record system, is live in the market, and the results are quite clear. We are reducing administrative overhead. We're allowing clinicians to see more patients. We're improving access to care, and we're increasing provider satisfaction. In another example, in banking, we provide a comprehensive AI-powered SaaS platform, including everything from commercial banking, retail banking, investment banking, anti-money laundering, financial crimes and compliance, payments, supply chain financing, CX, ERP, and HCM. That banking suite alone contains hundreds of embedded AI agents, all available at no additional cost to our customers. In retail, our AI-enabled solutions span merchandising, assortment planning, supply chain management, point of sale, commerce, and of course, ERP, CX, and HCMs. In summary, these are not systems that can be replaced by a small collection of niche features cobbled together and bolted on in the name of AI. So yes, some smaller or single-focused SaaS players may well be disrupted, but Oracle will not be among them. Now let me focus on a few key wins in Q3 in the application space. And by all means, this is a very short list, not an exhaustive list. Memorial Hermann Health System selected Fusion ERP, SCM, and HCM. This was a win over Workday. University of New South Wales also selected Fusion ERP and HCM, also a win over Workday. Gray Media selected Fusion EPM and ERP, a win again over Workday and also over SAP. Investec Bank selected Fusion EPM and ERP over SAP. HID Global Corporation also selected Fusion ERP and SCM over SAP. Ethiopian Shipping and Logistics Services Enterprises selected Fusion ERP, SCM, and HCM again over SAP. A major Wall Street bank elected to standardize on Fusion ERP for the entirety of their business and all of their business units, replacing SAP, full stop. Loudoun County Public Schools, Fusion ERP, EPM, HCM, and SCM. The J.M. Smucker Company selected Fusion ERP and EPM. Westfield Insurance picked Fusion ERP, EPM, HCM, and procurement. Mitsubishi UFG Financial Group is an existing cloud customer and database customer. They are now moving into both our Fusion ERP and industry SaaS applications. STC Kuwait, an existing major tech customer, is moving EBS to the cloud to support their growth. So just this very small list of major applications wins in the quarters. In the quarter, we had over 2,000 customers go live in Q3. 2,000 customers, when you think about our industry applications and our Fusion applications put together, over 2,000 of them went to live. And more importantly, we continue to see the median time to live decrease. A very small sample of go lives in the quarter. Hearst expanded their ERP with EPM as well as HCM. J.M. Huber Company is now live across Fusion ERP and SCM. Emirates Health Services went live with HCM, which enabled a comprehensive HR, payroll, and talent suite to elevate their workforce management. Niagara Bottling went live on SCM, moving from on-premises ERP to Fusion. Seadrill is now live across ERP, HCM, SCM, and EPM. Again, with 2,000 go lives in the quarter, that's just a very, very short list of go lives, but you can see hopefully not only momentum, but multi-pillar momentum with these customers. I also have an equally short list compared to the overall list of key tech wins in Q3. Lockheed Martin selected OCI High Performance Compute to scale AI across their environments efficiently. Rhombus selected OCI Compute, networking, and storage for AI video and security across all of their workloads. Lucid Motors selected OCI Core Services for data and connectivity in order to expand into European markets. Infomart in Japan selected OCI for their mission-critical B2B platform. Claro Brazil selected OCI Alloy for sovereign AI. Air France KLM, which is a multi-cloud win, featuring a win with the Oracle database at Azure, and that led to a 13x performance improvement at a significantly lower cost for Air France KLM. Activision Blizzard, an existing Oracle e-business suite, was also an Oracle database at Azure win. Oracle's embrace of AI across our strategic applications is leading to broader enterprise conversations with our customers involving our full stack: OCI, AI data platform, Fusion applications, industry suites. These conversations are about ecosystem automation. They're not about single apps. They're about automating the entire ecosystem. And they further been enabled by our simplified go-to-market model, which we spoke about in our last earnings call. This is allowing us to close more multi-product deals with more customers, combining the power of the Oracle database, our OCI platform, our AI tooling, and our complete applications suites. In constant currency cloud applications, deferred revenue was up 14% versus in-quarter cloud applications revenue growth of 11%, which further supports our acceleration thesis. With that, Clay, I'll turn it over to you.
Thank you, Mike. Okay, so I'm going to talk about two segments of our business: our multi-cloud database and AI infrastructure. Both are growing extremely quickly. Multi-cloud database revenue grew 531% year over year. AI infrastructure revenue grew 243% year over year. Both also have demand that exceeds supply and a clear execution plan from Oracle that will rapidly turn that demand into profitable recurring revenue. Oracle Database has run on any hardware and operating system for decades. Oracle Database Cloud Services, up until recently, were only available in a single cloud, OCI. We created our multi-cloud partnerships with first Microsoft, then Google, and finally Amazon to bring the best database platform to all clouds. Those partnerships unlock an enormous backlog of demand. Our database customers who want to use our database in other clouds. This quarter, we achieved an important milestone. We have global region coverage in all of our partner clouds. We now have 33 regions live with Microsoft and 14 live with Google. We delivered significant growth with AWS, beginning Q3 with 2 AWS regions live, exiting Q3 with 8 AWS regions live, and we will exit Q4 with 22 AWS regions live. AI is also accelerating the adoption of our database cloud services. The rapid improvement in model coding skills and agentic abilities pushes customers to move their most valuable data into our cloud services. They need access to the latest AI features to support vector embeddings, MCP server access, and advanced security controls. Customers also need their data to be co-located with the agents themselves, and our multi-cloud database makes that easy. Our multi-cloud architecture brings the best of Oracle Cloud into our partner regions. This ensures that we will rapidly turn billions of pipelines into highly profitable database service revenue. Demand for AI infrastructure, both GPU and CPU, continues to exceed supply. This is directly visible in our $553 billion RPO. I want to share a model for how that RPO turns into profitable recurring revenue, as well as some operational metrics that are early indicators of our progress. AI infrastructure begins with data centers and power generation. Through our partners, we have secured more than 10 gigawatts of power and data center capacity coming online over the next 3 years. Those infrastructure investments also need funding, and greater than 90% of that capacity is fully funded through our partners, with the remainder planned to finish this month. Once the data center is secured, several things must come together. The data center and on-site power generation has to be constructed. Compute, networking, and storage has to be designed, manufactured, delivered, and installed. All the capacity inside the data center also has to be funded. We continue to innovate across each of these steps. We optimize our data center construction through standardized designs. Our supply chain has improved with more suppliers and deeper relationships. We have tripled our manufacturing sites and increased rack output by 4x, all in the last year. We have scaled our installation processes to enable multiple phases of delivery in parallel. Time from rack delivery to revenue has reduced by 60% in the past several months. We also continue to innovate on our business models. On our last earnings call, I shared multiple ideas for how we can incrementally grow our AI infrastructure without Oracle raising more debt or issuing equity. We have signed more than $29 billion of contracts since then across multiple customers using that new model. A combination of bring your own hardware and upfront customer payments enables us to continue expanding without any negative cash flow from Oracle. Of course, this $29 billion is in addition to other deals we signed this quarter. Ultimately, all of this results in capacity delivered to customers and revenue to Oracle. In Q3, we delivered more than 400 megawatts to customers. 90% of that committed capacity was delivered on or ahead of schedule, as we've consistently done over several quarters. This is why customers continue to choose Oracle for their infrastructure needs. Investing in AI infrastructure is capital intensive, but our operating model is optimized to ensure profitability. Flexible infrastructure design, high utilization, and rapid handover combined with diversified customers creates an incredible business. Increased scale spreads our fixed costs over a larger base, increasing profitability. It's unprecedented to scale a capital-intensive business so quickly while also increasing profitability. Looking at the AI capacity we delivered in Q3, our gross margin for that remains above our 30% guidance at 32%. Now combine that with our other segments of OCI, which have much higher margins, like our database services, and you can see why Oracle is growing so quickly and profitably. Our numbers speak for themselves. We are over-delivering on FY26 revenue and earnings, and we are constantly raising our FY27 forecast. This is made possible by Oracle's transition from a predominantly seasonal license business into a highly predictable, recurring revenue cloud business. Demand for AI and advanced compute will continue to expand broadly across the economy. There will be many successful models, agentic platforms, and businesses that emerge. We support hundreds of the most advanced AI customers today, and more continually want to work with us. We build infrastructure that is flexible, fungible, and can support the smallest workloads up to the largest. We continually offer the latest in accelerators, from the most recent NVIDIA and AMD options to emerging designs from companies like Cerebras and Positron. Altogether, we are confident that the investments we make now in data centers, compute capacity, and customer relationships will only grow more valuable with time. Back to Ken for questions.
Thank you, Clay. Regina, if you could please poll the audience for questions.
We will now begin the question and answer session. To ask a question, press star, then the number 1 on your telephone keypad. We ask that you please limit your questions to 1. Our first question will come from the line of John DiFucci with Guggenheim. Please go ahead.
Thank you. Wow, a lot going on here. So listen, I'm going to let others ask about the AI infrastructure question, but we've heard Doug talk about a halo effect that the AI infrastructure business is having on the rest of your business. This quarter was strong, and you said that the RPO increase was from large-scale AI contracts. At the same time, we're hearing from the field now that that halo effect is actually turning into business. Outside of AI infrastructure, it sounds like the go-lives are steady, but the business activity, and especially the pipeline, are up materially for more traditional cloud workloads, including dedicated region, sovereign clouds, even alloy deals we've started hearing about. In addition to what Mike started talking about with the often related apps deals, I realize these types of deals aren't the scale of these AI deals, but can you talk about what seems to be an underlying momentum building in these businesses? Am I right to be thinking of this? And if I could, on a sort of related topic, can you give us any visibility into Capex for fiscal 27?
Okay, hey, John, this is Mike. I'll take the question. So yes, we absolutely are seeing a halo effect, and let me add a little bit of color on that. As far as the apps business, the fact that we're training so many models on OCI and so closely provisioned to our applications allows us to embed very high quality AI services right into our applications, as I said, as features. So not only are we serving these customers, serving the model vendors for training, but we're also embedding a lot of the output right into our applications. Of course, we're doing prompt engineering and things like that to make it relevant to the business. But the fact that we are the custodian in our applications business of so much of the world's mission critical data, we have very close provisioning, very close proximity to these models. Putting those two things together allows customers to get value from AI very, very quickly. And if you've heard any criticism of AI in the world as well, I can't get value quick enough. Well, actually, when you bundle up as a service and expose the private data to AI, that we are the custodian of the applications, we've seen terrific wins. I mentioned some of the verticals you heard about there, but I think that's true across the board. The other piece that is a very interesting halo effect is leveraging our infrastructure, just OCI infrastructure as a budget creator for customers. You've heard us say it before. We're faster and cheaper than everybody else. And when customers are thinking about these large-scale application or large-scale infrastructure transformations, we can often help them get to a position of budget creation to be able to fund that transformation simply by moving their workloads to OCI, because we can run them more quickly and more efficiently and less expensively than our competitors. And then finally, the other halo effect, before I turn it over to Doug for your question on Capex, is around sovereign AI. Our sovereign story is not new, and it's not a knee-jerk reaction to things that are happening in the world. To combine together with our alloy story, we're really seeing increasing pipeline across the world. The fact that our form factor, and we're so differentiated in our form factor, and we can deliver not just a smaller form factor, but complete OCI services on top of that form factor, no matter how many racks are involved, whether it's 3 racks or 500 racks. We think that's a huge differentiator in the market. So you put apps together, you put OCI AI services together, you put sovereignty together, and yes, it's a pretty big halo effect.
Yeah, and John, let me start by acknowledging the creativity and getting 2 questions in at the same time. That's always fascinating to watch. So on Capex, I think we'll get back to everyone after the end of the fiscal year and talk about next year's Capex at that point in time. But I will state a couple things. Obviously, from what Clay has gone through, the most interesting thing that you should start thinking about is the uncoupling of Capex with capital requirements from Oracle. Obviously, when we have these additional funding mechanisms, there may be additional Capex, but it doesn't require out-of-pocket cash from Oracle, which is quite interesting. So underlying that, as we remain committed to what we talked about last quarter, which is maintaining the investment grade rating at Oracle, as well as staying within the financing envelope that we talked about, obviously, of which we've announced that we're doing $50 billion this calendar year of that total. So more to come, John, on the Capex after next quarter.
Very much appreciate the color on that, Doug. And Mike, your prepared remarks on AI and how Oracle approaches it, everybody should use that because it's a logical approach. So thanks, guys, and nice job.
Our next question will come from the line of Mark Murphy with JP Morgan. Please go ahead.
Thank you. Congrats on the acceleration, Clay. As Oracle transitions to higher levels of AI inferencing, what do you view as the right strategy for trying to optimize the location of your data centers? For instance, if you have these huge centralized data centers in Texas and Wyoming, they're very close to power, but they're pretty far from the population centers and the fiber routes that are out there on the seaboard. So it crosses our minds that the users and the devices are a long distance away. So as you make this move more into inferencing, are you seeing any reason to try to pivot those locations a little closer to where the users and the traffic are?
Sure. Great. This is Clay. Great question, Mark. So let me start by, I think, highlighting our perspective on inferencing and how that impacts kind of data center deployment. So first thing I would say is I think we are, for a while there was a lot of training going on. Inferencing is very rapidly growing everywhere and anywhere. I think it's because of higher and higher utilization of the models themselves and also new use cases. As anyone who's been using Claude or Codex recently in the software space knows, these are incredible tools that are changing how we do everything. So inferencing is going to have a huge amount of demand. Now, when you talk about data center location, you mentioned, latency is the one. Realistically, there's several reasons you might care about the location. It might be for the cost. It might be just overall availability. It might be for sovereignty. So there's different reasons to pick a location. But honing in on your point about latency, the thing I think to understand is that latency is all proportional, meaning if what you're trying to do is you're trying to do a very, very low latency trade on the stock market, waiting for the 100 millisecond round trip from coast to coast is a bad idea. If what you're doing is you're asking a question for your business, it's going to take an AI model several seconds to think about. An extra 40 milliseconds of latency from New York to Wyoming is not going to hurt you. And so when you actually talk to customers about use cases where they need lower latency, the latency problem right now is not actually the location of the hardware. It's the type of hardware that's being deployed. And that's why you're seeing so much innovation going on around these AI accelerators. If you look at what GROQ, Grok does, or Cerebras or Positron, all of these different types of customers are saying, well, not only how do we reduce the cost of inferencing, but also how can we significantly reduce the latency of it? And I think, if you look forward to, GTC from NVIDIA next week, you'll see an announcement from them. But across the board, I think the way that as an industry we're going to consolidate and kind of reduce latency has to first start with a different architecture for that inferencing. And thankfully, the data center location is actually a very tiny part of that. So it makes it much more flexible for us to go out and put data centers where power is abundant, land is plentiful, and we can actually optimize for what's available to meet this ever increasing demand.
Thank you very much.
Our next question comes from the line of Siti Panigrahi with Mizuho. Please go ahead.
Great. Thanks for taking my question. I want to ask about the opportunity with your AI database and AI data platform. So with recent excitement on AI and around enterprises now adopting tools from frontier LLMs, so what are you hearing from customers about training their private data and building their private LLMs? And how confident are you in seeing the inflection in your AI database growth that you talked about at the Analyst Day in October?
Yeah, thanks. This is Clay. So look, I think there's two parts to that question. One is how much adoption are we seeing of kind of private LLMs, and then how much are we seeing of using AI with private data? I think in the early days, a lot of people thought that most customers would be doing, very specific training of their own large language models, I think that is largely proven to not be the case. Instead, what I think is incredibly popular and growing in popularity is people taking the best models and wanting them to combine that in a private way with their private data. And we're seeing a lot of demand for that. If you listen to Mike earlier talk about how we're embedding these AI models into our applications, that's one use case. But obviously, not everything, unfortunately, runs inside of an Oracle application, and lots of custom applications are written. So we added a lot of functionality to our Oracle AI database, make it easy to connect via whether it be through MCP servers or natural language to SQL that you can use these models to use. But also, we have our AI data platform product, which is really about solving this exact problem. You have a lot of data, it may be application data, it may be custom data in different data lakes and lake houses, it may be data in a structured database. All that together gives you an agentic platform to quickly build applications on, as well as access to all of the greatest models from multiple providers. So across the stack, we're seeing a lot of momentum across that, and that's why, in my prepared remarks, I talked about the growth that we're seeing with our multi-cloud database. What we see is that for customers to take advantage of the latest and greatest AI, they first have to be in the cloud, and there's still a lot of data that's not in the cloud. And so we see acceleration of moving that, most important private data to a cloud environment so they can then take advantage of the latest and greatest AI with that data.
Great. Thanks for the color.
Our next question comes from the line of Mark Murdler with Sanford Bernstein. Please go ahead.
Thank you very much for taking my question, and congratulations on what's a really good quarter. Really great work. I'm going to change over a little bit and discuss on the financial side a little bit. Now that you've completed your major debt raise, can you explain, given the blend of the cost of the AI, building out the AI data center, and the cost of raising capital to fund the AI data center, how comfortable are you with the values you're creating from the AI data center business itself? And then as an adjacency, if you don't mind, can you talk a little bit more on the sovereign cloud? Can you discuss how you parlay the AI data center business into being the AI provider for sovereign clouds, and how that should impact the value of Oracle? Thanks.
Sure. I think we're going to split this one up. Mark, this is Clay. I'll take the first half, and then I'm going to throw it to Mike to talk about some of the sovereign cloud stuff. So, look, when you think about the overall profitability of these AI data centers, there's two pieces. One is how profitable is it purely on the accelerators themselves. We gave guidance in the past that we see gross margin in the 30 to 40% range on that. That continues to hold for us. And as we continue to get better and better at running these data centers, delivering them more cheaply, optimizing the amount of cost for networking and hardware spend, as well as power, we see that continuing to incrementally improve. So we're very pleased with that. The other thing to understand is that in these AI data centers, whether it be for inferencing or for training workloads, only thing being procured is not AI accelerators. There's a lot of general purpose compute. There's a lot of, whether it be high performance or large scale blob storage. There's load balancing. There's identity security products, et cetera, et cetera. Typically on the order of 10 to 20% of the total spend ends up going to adjacent services. And when you factor that in, which have higher margins, depending on the mix of services, the overall profitability continues to improve. And that's without taking into account, as I mentioned earlier about our multi-cloud database business, that's a much higher margin business, more in the 60 to 80% range. It's growing very, very rapidly. And so when you combine all of these pieces together, the overall margin profile of OCI continues to strengthen and grows rapidly. I mean, the thing I would say, the question that I think is underlies this that maybe people don't understand is the limitation on the profitability is not on the capacity we've delivered. So let's say that I'm building a data center and it has 4 data halls, and I deliver the first data hall. That one's profitable. The reason that we're not even more profitable right now, despite the fact that we are continuing to grow EPS, et cetera, is because we have so much under construction at one time, and we have some expenses for those things. Now, we're very good at that. We're very, very good at minimizing the time under which that construction is happening. We're very, very good at reducing those costs during that time period, but they're not zero. And so as our business is going through this hyper-growth phase, that's the only drag on profitability. But thankfully, we're very good at getting better at delivering that capacity. That capacity, when we deliver it, is all already contracted for at a very profitable rate. So when you combine those things together, we're extremely confident in both the capacity we delivered and the continuing to increase profitability of our AI business. Mike, you want to talk about sovereignty?
Yeah, so sovereignty, as I mentioned earlier, I think we're very well positioned. A year ago, sovereignty was about data sovereignty, and there were some faux solutions in the market where there was sovereign data from a primary perspective, but DR maybe somewhere else, maybe in another country. Of course, that's no longer acceptable. Sovereignty is about sovereign data, sovereign operations, and even sovereign contracting. Our Alloy model is perfectly positioned to deliver on all three of those things. And by delivering full stack solutions, again, the big difference between what we're doing with sovereignty and what some of our competitors is doing, we're not simply putting an edge sovereign zone in. We're putting full stack OCI, which has all of our OCI services, and as you mentioned, margin mix also allows us to run all of our application suite, our AI data platform, in that sovereign zone as well. Of course, the margins on some of those are different than our infrastructure margins. So I think that we're in a very unique position to deliver all that we have at Oracle in a sovereign zone. That sovereign zone can be as small or as large as the customer wants it to be. The other piece is that we have full flexibility as to where we draw the line of sovereignty. We often think about sovereignty in terms of lines of customers, but we also have customers that we've been talking with, enterprise customers, who may operate across multiple countries, let's say in Europe or in Africa, that actually want to have a sovereign zone that they control and they operate in their data center, and they're serving customers in a certain vertical industry like healthcare, for example, or retail, for example, and their sovereign zone is drawn in their Alloy across those countries. We can accommodate all of that. We have the most flexibility. We think we have the most flexibility in contract and the most flexibility in delivering. And again, the most important thing is that we deliver all that Oracle has in these sovereign zones. It's not a subset. It's not a few edge devices. It's all of OCI.
Extremely helpful, both the answers. I much appreciate it. And congrats again.
Our next question will come from the line of Raimo Lenschow with Barclays. Please go ahead.
Perfect. Thank you. Congrats from me as well. I wanted to ask something that we are struggling a lot with when we talk to investors, and that's kind of the theme of SaaS software, application software is dead because AI is going to kill it. Just wanted to hear what you guys are hearing when you talk with customers. Is that like one of these investor things? Is that getting discussed on the customer side as well? And how do you explain it? I'm just thinking about what you guys do is a lot deterministic rather than probabilistic. So, that might probably be the explanation here, but just wanted to hear your perspective again. Thank you.
Yeah. So this is Mike. I'll take the question. So as far as the customers that I spoke with, I've not yet met a customer who tells me they're ready to give away their retail merchandising system, their core banking system, demand deposit account systems, electronic health record systems, and some cobbling together of niche AI features are going to replace all of that overnight. In fact, I hear quite the opposite from the customers. What they're asking is how can we consume as much AI out of the box that you're putting into your applications across the board? And how can we get that up and live as quickly as we possibly can? Because we think that's the best way to actually realize value. So, look, these systems, what we're running at Oracle, these are highly complex systems with we have decades of industry experience, decades of regulatory compliance, and these are the systems that our customers use to run their business, run their government agency, run their healthcare organization, whatever the case is. I really like our position here. As I said, we're leaning very heavily into AI ourselves. So we have 1,000 AI agents already live in Fusion. Our banking suite alone has hundreds of AI agents just inside our banking solution. So yes, we think AI is disruptive. We do, but we think we're the disruptor because we're actually embedding the AI right into our applications, full stop. Again, at no additional cost. These are features that come in the application suite as part of quarterly upgrades, as part of a regular cadence. So I'm actually, instead of think that AI spells the death of SaaS, at least for Oracle, I think it actually helps our SaaS position and helps us get to market even more quickly. We're thrilled with the results that we have, and expect to have a lot more color on this as we go forward.
Okay, thank you.
Our final question will come from the line of Brad Zelnick with Deutsche Bank. Please go ahead.
Great. Thank you very much. And I'll echo my congrats and also just say that the messaging is very, very clear and very helpful. My question is for Mike and perhaps Larry, and it extends on what Raimo's asked. You've introduced AI Agent Studio inside of Fusion, and we all know that the crown jewels within an enterprise live inside of Oracle Database and Oracle Apps. But I'm curious, how do you see Oracle's role evolving in a world where many other players are vying to be the AI interaction layer across multiple different enterprise systems and workflows?
So, Brad, it's Mike. So I'll start. So, look, I think data gravity matters here, and I think mission critical data gravity matters even more. So, as we said, we've announced the AI Agent Studio inside of Fusion. Fusion is a system inside our customers that is the custodian of their operational data, their mission critical data. So if you're going to build a bunch of AI agents or your system integrator is going to build a bunch of AI agents, the question I would have is, where would you start? Well, you'd start inside the system of record. You'd start inside the system of gravity, because that is the data from an inferencing standpoint, from a retrieval augmented generation standpoint. It's going to be highly relevant and highly specific and add a bunch of context to AI. Now, the AI Agent Studio that we've released in Fusion is not specific to just Fusion data. You can build AI agents across our industry applications, across third-party applications. Third parties can build AI agents in there. So the fact that we're delivering, an all-in-one best-of solution, a full-scale SaaS application, AI-powered SaaS applications, and giving you the ability to create your own AI agents, either on top of that or next to that, in a standard, upgraded quarterly platform release schedule, I think is going to be quite attractive, because this AI Agent Studio that we built in Fusion, it's part of our quarterly upgrades. It's part of our regular security patching. So you're getting the best, we think, of both worlds. You're getting packaged SaaS applications. You're getting an Agent Studio, which is very, very close to the most mission critical germane data that an enterprise possesses, and you're getting the ability to create your own custom bespoke agents if you'd like to as well.
Yeah, I'll just end with, we provide a bunch of pre-built agents for all of our applications. But in addition, we provide a development environment, the AI Data Platform, the development environment that allow our customers to easily add their own agents to what we built. We don't think we can build all the application agents for a banking system or all the application agents for a healthcare system. A lot of our partners are going to do that. A lot of our customers are going to do that. What the AI Data Platform does is it provides a complete integrated development environment where you can build your own agents using any AI model that is in the Oracle Cloud. And that is basically all of the popular AI models. You can use it for coding the agent. You can use it, you do multi-step reasoning for queries. We plan in our Fusion accounting system, for example, we will have a complex agent that does something called the close. So when you close your books with Fusion in the not too distant future, it will be an autonomous agent, no human beings involved. You will close your books by simply telling the AI agent to go ahead and close your books, and then you will get your results. We provide a lot of AI capability built into our applications, but they are open. They are open that allow our customers and our partners to add to that portfolio of agents. And we build an entire ecosystem that automates healthcare, automates financial services, automates retail. That is what AI is allowing us to do, is to expand our horizons for the scope of the suites of the SaaS software we're building to automate entire ecosystems. Let me talk about healthcare. In healthcare, Epic automates hospitals, acute care hospitals, in some cases clinics, but primarily acute care hospitals. We automate acute care hospitals. We automate clinics. We automate laboratories. Well, we automate the payers, the people who actually pay. We automate the insurance companies. We automate the HCM system that trains their nurses, that schedules the right radiologist when an MRI is given, that automates the hospital's financials, that also automates the FDA and that approves the latest drugs, that deals with the pharmaceutical companies. That's the healthcare ecosystem. It's enormous. And thank God we have these coding tools now that allow us to build a comprehensive set of software, agent-based software, to automate a complete ecosystem like healthcare or financial services. That's what we're doing at Oracle. That's why we think we're a disruptor. That's why we think the SaaS apocalypse applies to others, but not to us.
Really great stuff. Thank you, Larry. Thanks, Mike, and congrats.
Thank you, Brad. A telephone replay of the conference call will be available for 24 hours on our investor relations website. Thank you for joining us today. And with that, I'll turn the call back to Regina for closing.
This will conclude today's call. Thank you.
Immediate thoughts? Neil? You're a buyer officially?
No. Not because I'm bearish or anything, but just because I like other names.
Yeah, that's fair. That's fair. Steve, first thoughts?
I mean, I just ran a lot of numbers. This is not a compelling story. I'm sorry. I'm just going to say it. Sorry, not sorry. And when you actually look at the cash from ops and the Capex, where it is compared to their peers, they're so far behind. The negative liquidity scares me. Sure, it looks like it improved. The long-term debt's only $124 billion, and they padded their cash and short-term investments. I'm sure they issued some shares during the quarter or something, but it's still negative $86 billion net liquidity, negative free cash flow of almost $25 billion, and their cash from operations in the trailing 12 is $23.5 billion. Meta, Amazon, Microsoft, Alphabet all produce over $100 billion in cash from ops. It's not compelling at these levels. It just isn't when you actually look at them versus their peers.
Jose?
Yeah, I mean, compared to the big players, I enjoy kind of like the other players better in this space when we're talking about the giants. One thing that I did find interesting that I don't think is just Oracle related, but just kind of like the AI infrastructure related is and we kind of heard it from other players, but pretty much if Capex is increasing, it doesn't mean that they necessarily have to raise more cash or do more improvements. Some of this cash could just be coming from a lot of these prepayments coming in. When kind of doing modeling on Capex and maybe how it might affect some of the other numbers, it's great to understand that there's that variable out there of it. So I found that a little bit interesting from them. Again, we've heard similar stories from like Nebius and other players where they mentioned that a lot of the Capex is kind of already there or available due to various routes, but it was good to see it from another entity.
Yeah, I think you said this at the beginning, but that's not an Oracle statement as much as it's just the sort of the direction of the market right now, going to these upfront payments.
Exactly.
Yeah. Makes the, I guess, the economics a lot better to stomach as investors. And is CoreWeave also doing that? I know Nebius obviously is definitely one that's been talking about this sort of 100% upfront payments, and maybe Oracle as well, trying to get some upfront as well. But what's CoreWeave's stance in some of the other clouds?
Yeah, I haven't heard from CoreWeave of them kind of taking the 100% prepayment already on stuff like that. I know they were also just at that TMT, I think, conference last week.
Yeah.
I don't recall them saying something like that. But just like contracts are getting long. The other side of the story that we're hearing from other players is definitely there, though. Like the contracts getting longer. I also wonder if that takes place, right? It's like, is it 100% prepayment on like contracts that might be a year or two, versus what maybe some other players might be doing contracts that are 5 or 6 years? Like, is that where maybe there's a difference between some of these 100% prepayments? But I didn't hear anything from CoreWeave saying that.
It looks like the market is starting to read Steve's article here, listening to what he has to say. They're selling it off a bit. I'm obviously joking, but Steve, do you think that the reaction in the stock being up 9%, at one point almost passing 10%, I was really looking forward to seeing that up 10%, but I think it got to like 9.95. I never saw it past 10.
Here, do me a favor, show my screen. And I'm going to go into this much deeper tonight, but look at this is why I can't get excited about it. This table on the right shows their cash from operations growth over the past 5 years. It's minimal. Yet on the left table, their Capex expansion is going parabolic. Now they're catching up. I wouldn't even say slowly but surely, because their Capex is going parabolic compared to where they were trying to play catch up to their peers.
Okay, but the peers that you're comparing them to are, 5-6x the size. So what's the
Doesn't
multiple
matter. They're playing in the same sandbox. This is the sandbox they're playing in for data
but you pay a different price for it, right? You're paying $400 billion, not.
You can't compare them
trillion.
to an IBM hypercloud or a Cisco hypercloud. They are competing against Amazon, Microsoft, and Alphabet. And when you see this type of Capex expansion, yet cash from operations not really expanding, and negative liquidity and negative free cash flow, it's not a great buy here, at least for the short term. Now, if you're going to say, well, over the next 3 to 5 years, they're going to catch up, they very well could, and make the argument that they're currently 2 to 3 years behind. And when you look at what the hyperscalers have done since 2023, that's what Oracle is going to look like over the next 3 years. You can make an argument. I think this sells off tomorrow, and I think that this is going to be sideways. That's just me. Long term, it's interesting. Short term, it's not.
Yeah, I agree. I mean, it's crazy to see how that cash flow here from them is crazy. But it's for them, their revenue besides OCI was stale. They weren't growing. I think it was like revenue growth of like 2-3% on a year-over-year basis. And I guess this is why they're trying to catch this cloud story, right? This is for them, where everybody else was growing in their advertisement business and everything else. This is like the only way Oracle can transform. So it's either the history sucks, and you have to really believe that they're going to try to be able to catch up. And it's like, I guess that's the risk you come here with Oracle, opposed to some of the other big players out there.
Yeah, they're making a big statement that this is the future, and I agree with them. This is the future for them. But once again, in the short term, 1 to 2 years, I just don't think Oracle is nearly as interesting. This is a 2 to 5 year play. And I didn't like on the earnings call, don't compare yourself to Salesforce. Your ERP system and Salesforce's ERP system, two completely different things. Your true competitors are Workday, SAP, Microsoft Dynamics, not Salesforce. Salesforce does not offer a ERP system that does financials, HR, and payroll. They do something completely different. So to compare against Salesforce was ridiculous.
Anything to add, Neil?
I mean, I agree with the points. The thing is, nothing really has changed, because even 6 months ago, 3 months ago, there was never a point to me where Oracle is more compelling than an Amazon or an Alphabet or a Meta. Like, I don't even know at what price I would choose an Oracle over these other players. Oracle can very well outperform the market. I mean, unless something changed, I don't think something has changed, right? The guidance that they gave us, so I looked back at the numbers. It's for cloud infrastructure, $18 billion for this fiscal year. They're on track to reach that. Then it goes all the way to $144 billion by fiscal 2030. If they can reach those numbers, then okay, then the price you're paying today, I guess, makes sense. I guess the question here is, can they go from the $18 billion all the way to $144 billion in 5 years? It was nice to hear that they delivered more than 400 megawatts of customers this quarter. 90% of that committed capacity was delivered on or ahead of schedule. So again, those fears of some delays and things like that are going to go away a little bit. But like Stephen showed, there are still some things that, yes, you don't necessarily have to like, despite, yes, the difference in sizes between Oracle and the big tech players. But forget about the market cap difference. The multiples that you're paying for these companies are not that different. Like the multiples that you're paying for an Amazon, an Alphabet, or a Meta compared to an Oracle is not that big of a difference, despite the $1 trillion difference in market cap. 1 trillion plus, actually, in some of the cases. And so, yeah, to me, nothing really has changed from a would I rather own Oracle or one of the other big players. I would always choose the big players.
Yeah, I mean, I agree. I'm a shareholder in Google, Microsoft, Meta, obviously NVIDIA. I don't know. I've just never liked Oracle. Also, just the amount of touch points that I have with Oracle, extremely different than what I have with Google or a Meta or something like this. And that just allows for me to understand the businesses a little bit more. Oracle's a little bit more opaque, and maybe there's alpha there. But with some of the business risks that they take on, I just don't want to take that risk whenever I think that there are some others that still have amazing upside, but I just think their business is a little bit more transparent. That could even be a Nebius or even a CoreWeave or something like this. And I don't even own CoreWeave yet, but that's next on the list. What are the I like this question here. Why would someone pick the Oracle names over some of the other cloud names right here? Like what is the bull case? Jose?
Go ahead, Jose.
I would just say, I mean, you're hoping that all this Capex spend is going to make them get a nice amount of market share in cloud. And you're going from, I forget what's their market cap right now, like $400 billion around, give or take, to maybe $1 trillion. It's just the growth opportunity, right? The ability to be able to take market share, right? The ability of starting from a smaller cloud player and becoming one of those top names in that space. I think that's what you're going for. But for me, with the kind of growth that's coming with like your Nebius or your CoreWeave, I think you get even more excitement there. If you want to risk it more and compare it to risk it a little bit more, I think I prefer that route a little bit more. Yeah, it's either
essentially. I think what you're trying to say as well is the likelihood that they succeed may be higher than some of the riskier, smaller names.
I don't know. I mean, I still,
because if the likelihood that a Nebius succeeds at a $20 billion market cap, they're also looking to greatly expand revenue and
I mean, with Oracle, you have a lot of the other solutions, like their database within the multi-cloud, that can give them a little bit of a small edge. But I don't know if they have the chance of succeeding is that much higher compared to like those other players.
Steve?
Yeah, I agree with what Jose said. The reality is that people are looking at what Oracle accomplished last year in the share price, looking at a deep discount, thinking that it could go back, and they are getting in a couple years behind the other ones, and Oracle has a strong foundation it can fall back on. The likelihood of it going under is slim. It's got a good fortification, and you're hoping that the cloud infrastructure play is as big as what everybody thinks it is, and Oracle will become a huge hyperscaler, and they're going to go from negative 25 billion to 50 to 100 billion in free cash flow at some point over the next 5 years. I mean, you look at what the street is projecting in for forward revenue growth, they only see a tremendous golden road ahead of them. Question is, at what expense does that revenue come? With how much debt do they have to put on the balance sheet? And we're not going to know until a year or two from now. Now, maybe it subsides. Maybe they get some additional equity at the market offerings, which I would prefer if I was a shareholder, which I'm not. I would prefer share dilution rather than tapping the debt markets for this reason. Even though they can tap the debt markets and pay the VIG in a lower rate environment, I would rather tap the equity markets, issue shares, not pay the additional cost for financing the debt, and then as free cash flow increases, start a ridiculously big buyback program, because that narrative will eat up everything else.
Very interesting name.
2 quarters from now might shock the stock in a positive or negative way when they give us Capex for next fiscal year, because they didn't want to talk about that in this call.
Right. Do you think they give that in Q4 or next quarter?
Possibly, yeah. Yeah, because this is Q3 fiscal year 26, right? Yeah, so next quarter. Yeah, probably.
I mean, the market will be screaming for it. If they don't give it, there would be. I don't think that would do very well for the stock. I don't know. I just think obviously there's different use cases and everything, but if like Steve always says, $1 of revenue is $1 of revenue, $1 of earnings is $1 of earnings. Like I look at Google, Google Cloud Platform with other existing businesses to diversify, faster growth on the cloud. They're investing heavily. Like they want their market share to increase as well. Obviously, the market cap today is extremely different at nearly 3 trillion or whatever. But if you're looking and protection, I just think Oracle scares the crap out of me versus a name like Google. And if you want growth at all costs, go for a Nebius or even some of the other smaller neoclouds. That's at least the way that I'm playing it.
Yeah. I think at one point Oracle was pretty exciting, just because like the forward PE ratios or multiple for Oracle was like at like 19, low 20s, when like most of the Max 7 was like in the high 20s and low 30s. But now it's a very different environment where a lot of these Max 7s are sub 25 forward PE ratio, like we saw NVIDIA's at 22. I think Microsoft is sub 25. I think most players are in the sub 25 next 12 months PE ratio. And at that moment, it's like that thesis doesn't play out anymore. Very similar to you mentioned, Tanner. I feel safer and a great valuation with a lot of these Mac names. It sounds boring, but I like boring right now.
And I'm not just playing boring. Like, these are free cash flow generative businesses. Is it too much to ask for to make $1? I don't know. Well, expanding aggressively. I think Steve brought up that point very well. All right. Is there anything else that you guys want to add before we get going? All right.
Just noticed Steven has a picture of himself holding what is it, a cow or a goat?
Yeah, it's a cow.
It's a cow.
Somebody, William painted that at a MITS meetup for me.
Yeah. He also said that he was going to make me a pair of underwear that I could fit an ice pack in for my saunas.
For sauna time?
Yeah. So I could ice the boys.
There you go.
It's very important.
Yeah. But we'll leave it off.
That's how we end it. Yeah.
Yeah.
and I can't believe that's how we're leaving this off.
All right. Remember to ice the boys. Keep your sperm count high. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But until next time, bye for now.